Welcome to Frost and Sullivan's Growth Podcast. In each episode, we are taking a deeper look at transformative shifts shaping global ecosystems, from industry megatrends and technology innovation to evolving customer expectations. Today, we are exploring the top growth opportunities in the global vehicle rental industry, unpacking where the next wave of growth is coming from and what it means for operators, fleet managers, and mobility investors. Rental companies are stepping away from the old model of counting vehicles and moving toward building smarter, data driven, digitally enabled operations. We will be covering the key drivers of transformation, the megatrends reshaping commercial demand, the biggest growth opportunities on the table, and the best practices separating industry leaders from the rest. Stay tuned. The global vehicle rental industry is going through something overdue, a fundamental repositioning. For years, competitive advantage in this space came down to one thing: fleet size. The operator with the most vehicles in the most locations typically won the most business. That logic is breaking down fast. Today, what defines a competitive rental operator is not how many vehicles they own, it is how well they know, manage, and deploy that fleet. Real-time visibility, automated pricing, and frictionless customer experience are becoming the baseline requirements, not differentiators. And the pressure to get there is coming from multiple directions at once. Legacy workflows, manual ID checks, paper rental agreements, counter queues are actively costing operators money and losing them customers. Boards are no longer funding capability building programs without a clear line of sight to utilization improvement, margin uplift, and payback timelines. At the same time, fraud pressures are intensifying, with card-not-present attacks driving up insurance premiums and forcing operators into biometric verification and AI-powered fraud detection. Is your organization's investment roadmap aligned with what fleet competitiveness actually requires in 2026? Now let's look at what is actually generating new demand and new revenue streams across the industry. The first one is EV rentals as a real-world trial gateway. Corporates and private customers are increasingly renting electric vehicles to evaluate them before committing to a purchase or a long-term lease. This is creating consistent, premium-priced EV rental demand, and operators who are managing charging logistics well are capturing that margin. The second trend is the commercial and light commercial vehicle surge. Seasonal logistics peaks, Black Friday, festive delivery spikes, construction project cycles are turning LCV rental into a high-frequency, strong-margin segment. This is growing on par with passenger vehicle rental, and operators with dedicated LCV programs are seeing the utilization numbers to prove it. Third, digital aggregators are fundamentally changing how rental decisions get made. Customers are comparing, booking, and paying through digital channels more than ever. Operators without a strong presence on aggregator platforms and without a genuinely smooth digital booking experience are simply being bypassed. And fourth, corporates are moving away from fixed fleet ownership. Small and medium enterprises are converting fleet capex into flexible, project-based rental spend. This is a structural shift in commercial demand, one that rewards operators who can offer reliability, telematics integration, and uptime guarantees alongside the vehicle. Which of these demand trends represent the strongest growth entry point for your organization right now? The first is the transformation of the digital rental experience. The operators moving fastest are replacing every counter-based process with an end-to-end digital journey: mobile booking, biometric verification, keyless pickup, automated checkout. This is not just a customer experience upgrade, it is a cost per transaction story and a utilization story. Faster turnarounds mean more rentals from the same asset base. The second opportunity is commercial and LCV fleet expansion. E-commerce, construction, and field services are generating sustained demand for LCV fleets, and SMEs are willing to pay for reliability. Operators launching dedicated commercial programs with telematics integration and uptime guarantees are building a differentiated revenue stream that passenger vehicle rental alone cannot deliver. The third, and arguably the most strategically important, is fleet intelligence. Operators unifying booking data, payment records, damage history, and telematics into a single connected ecosystem are doing something their competitors cannot easily copy: predicting demand, preempting maintenance, and dynamically pricing inventory in real time. That capability is the margin driver of the next decade. How is your organization building the data infrastructure to shift from fleet management to fleet intelligence? So, what does the winning playbook actually look like in 2026? The operators pulling ahead are doing three things consistently well. They are treating digital infrastructure as a revenue initiative, not a cost reduction exercise. Every investment in automated check-in, mobile-first booking, or AI fraud detection is being measured against utilization lift and conversion improvement, not just cost savings. They are building dedicated commercial programs rather than folding LCV and corporate rental into their leisure-focused operations. Telematics, uptime guarantees, and account management structures are giving commercial customers a reason to consolidate spend with one operator rather than spreading it across a fragmented provider landscape. And they are investing in fleet intelligence platforms that unify data across the rental lifecycle. The operators who know in real time which vehicles are underutilized, which locations need rebalancing, and which customers are about to churn are operating at a fundamentally different level of competitiveness. Fleet size was the entry ticket. Fleet intelligence is the competitive moat. Thanks for joining us on Frost & Sullivan's Growth Podcast. For access to our research, competitive benchmarking, and best practice frameworks, head over to frost.com or email us at hello@frost.com. We'll be back soon with more to help you stay clear-headed and growth-ready.